Now, if you're a homeowner with home insurance and you've assumed that the total sum insured that you have in your policy is the amount that you'd get paid out should you lose your entire home in something like a bushfire, you may be in for a shock. This video is part of our series called Rebuild and Build Better. So be sure to like the video, subscribe to Undercover Architect's channel, and then hit the bell so that you're always notified when we publish a new video. Now, as a homeowner with home insurance, it can be reasonable to think that if you've chosen a total sum insured for your property and you've been paying premiums on that total sum insured, that would be the amount that you're entitled to should you lose your home in something like a bushfire or a similar event. However, as you'll see in this video, you can be mistaken. I'm Amelia Lee from Undercover Architect, and I help and teach homeowners how to get it right when designing, building and renovating their family homes. In this interview, I speak with David Keane from Solve My Claim. David Keane's been in the insurance industry for over 24 years now, and he created Solve My Claim to help and assist homeowners navigate their insurance claims and disputes. In the last 3 years alone, Solve My Claim has helped homeowners secure more than $24 million in additional insurance claim settlements. So let's dive in.
Well, David, it's awesome to have you here. I know that you're going to be sharing a wealth of information with everyone because you have a huge experience and knowledge base when it comes to this topic and helping homeowners deal with, I suppose, their insurance and just general information around how do we navigate the world of insurance so that we make sure that we're fully protected and managing our risk. Now, looking through a lot of your information online, I'm going to put resources for Solve My Claim in all of the links as well so that everybody can find you. You talk a lot about the fact that people, when they've experienced total loss, they might just assume that they'll just get the total sum that they've insured for, but that's not always the case. And I know with the thousands of homes that were lost in Australia's bushfires over the 2019 to 2020 period, you know, there'd be some that would be thinking, well, it's okay, I could just get then the amount that I've got. Can you talk through why that assumption's not necessarily correct and some of the different definitions that happen around this whole kind of total sum insured versus the reasonable cost to rebuild?
Sure. Okay, so I guess the first thing is most policies have a fairly similar wording around this area, and that is that in the case of a loss, so it's not just a total loss, but any loss, that the insurance company will, at their option, repair, replace, or give you the cash amount that it would cost them to repair or replace the damaged item. Now, that goes for whether it's just a damaged part of the home or if the entire home is damaged. And so what that means is if, hypothetically, the insurance company says that their builder can rebuild your home for, say, $400,000 and you've got a $600,000 sum insured, you're not automatically entitled to the $600,000 just because your home's been written off. You're entitled to, by the terms of the policy, what it would cost the insurance company to replace the house. Now, in principle, I have no problem with that, but the issue becomes that many times when builders will provide a quote, and they'll use that as a basis for the settlement, we all know that quote's going to bring with it variations and all sorts of changes throughout the repair process. So that $400,000 is very unlikely to be the final figure. And yet, if your house is a total loss, you can't go through that repair process and do those variations as you go because the house has been valued at that. So you're actually only entitled in principle to what it costs them. On the other hand of that too, on the other side of that is if it costs them more than your sum insured to rebuild the home, you won't necessarily get the additional because there are limits on the policy. And there are a number of reasons, which we might talk about a little bit later, as to why it might be more than your sum insured. But I think many people just assume that, okay, I've insured for 600, house is destroyed, I'm going to get 600. And that's actually not, in many cases, the way it's going to work out.
Yeah, I can already feel the kind of frustration rising in me because I think of our home, and that we were kind of prepping for evacuation in November, and my husband and I were going, okay, what's the place insured for? All right, yeah. It's enough. If this place went up in, flames and we lost everything, that would be enough for us to replace what we have here. But we wouldn't rebuild what we have. We would build something different, So, and it's that thing of where's the line of the insurance company getting to have a say in you've been paying premiums all this time based on that amount. So
That's right. Yeah. And where it becomes very unfair, in my view, is that the insurance company put all the onus onto you. So the onus to get the sum insured right is on you. So if you overinsured, you're not entitled to any refund. If you underinsured, well, that's bad luck. That's you didn't insure for enough. And so I think that the real unfair aspect to the whole contract, in my opinion, is the let's call them the educated party, the knowledgeable party, being the insurance company. They have expertise at their fingertips, and it would be a lot easier for them to understand and to establish what your home is worth. But they put it all onto the uneducated or the unknowledgeable party to the contract, the homeowner who really probably has no idea what the home's worth, and they say, well, it's up to you to get it right. If you get it wrong, well, you bear the consequence. And so that's what makes it so unfair. If it was a matter of, okay, we've all established that you've overinsured, so let's give you a refund on the premium for the last 5 years, but that's not going to happen. Or alternatively, if it's underinsured, and some policies will have, they'll have additional benefits where maybe there's a 10 or 20% increase on your sum insured in certain cases. So there's, to an extent, there's a limited amount of I guess, coverage or like a buffer that's built into some policies, but they are the exception rather than the rule.
Did you find that helpful? Well, go ahead and pop your comments below, and whilst you're there, check out the other resources that we have to help you on Undercover Architect. They're all listed there in the description. Now, be sure to like this video, subscribe to Undercover Architect's YouTube channel, and hit the bell so that you're notified every time a new video is published. And we've also got these videos to help you out as well for further watching. As always, thank you for tuning in and for letting me be your secret ally. Until next time, bye.